Good evening, ladies and gentlemen. Welcome to the Stock Market Brief Show. This right here is the VIX, the volatility index for the S&P 500. And as many people know, when we get the VIX to rise, it typically means that the S&P 500 can go through a period of consolidation and or a pullback. Now, these gray boxes on my screen are highlighting something very specific. It's a signal to know when the conditions are potentially changing. And notice how when the signal started, you can see multiple times the VIX did rise. And I'm pointing this out now because we are on the cusp of getting that signal back. All that and more on today's Stock Market Brief Show, where we navigate the financial markets through the lens of technical and intra-market analysis. If you haven't done so already, hit that thumbs up, subscribe to the channel. It's greatly appreciated. Let's go ahead and get into it. All right, ladies and gentlemen, welcome back to the show. We're going to start off looking at what happened in the markets. Then we're going to get into the goodies to what could potentially happen. Out of the 11 sectors that make up the S&P 500, almost all were down. We had a couple ones that were flat on the trading session, and we had financials lead the way, as well as healthcare. They were slightly bid. The index products, you can see everything was basically down on the day. NASDAQ 100 led the way to the downside. No surprise there. Tech was the worst performing sector. Now, this happened to happen with a rising dollar and a rising 10-year yield. We talked about that on a prior episode and discussed more specifically why it is that we thought that we could see the dollar potentially bounce and the 10-year yield. That was on the last episode. If you'd like to watch that, go do so. Let's move on. Gold was down slightly on the day. No surprise there, as it has a typically negative correlation to the dollar. Silver also reversed from a high to down here and closed near the low. Could spark a potential reversal here in silver. We'll see how that kind of shapes up in the very near future. Copper also reversed bigly on the day. We had a big gap up, closed on the low, and oil there closed near and around the low of the day as we saw multiple bounces, a lot of chop in oil as we're massively in this compression pattern still. Okay, that's what happened. Now, let's talk about now. This is the VIX, and these gray boxes are a signal. It lets us know when the market conditions change. And I'm pointing this out because, well, right now, we're about getting that gray box back. What is the signal that lets me know that these conditions can change and that volatility can rise? It's right here. This right here is the S&P 500 net gamma history. And what you'll see here is this line going through the center is the zero line. When it's positive gamma, you see the bright green. When it is negative gamma, you see the deeper blue. Now, you can see as we stand right here, we're in positive gamma territory. That's because we closed there. But as we all know, we had Nvidia earnings. Well, Nvidia earnings almost came down to the lower earnings expected move, which is bringing the market down after hours. Now, why is this important? Well, what I'm doing here is showing you the times that we've been highlighted, the gray, are when we were in that negative gamma territory. And as you can see, the ones that are highlighted gray, you can see the VIX, the volatility, typically rises. Now, the reason why I'm calling it out now is because of this chart. You can see we closed right here, which was above the gamma flip line. Now we're currently trading below it because, well, Nvidia. So if we are going to remain below the gamma flip line, well, that's exactly what was taking place in each of these situations. And if that's the case, we may see volatility start to rise or put pressure on the markets, meaning that the conditions of the market very well can be changing as we speak. Now, Nvidia earnings were good for the most part, right? If you look across all the metrics, but it still decided to sell off. So Nvidia, being the large market cap that it is with the high implied volatility that it has a big weight on this market, including the Qs, right? The SMH, which is the semiconductors ETF, and then also the S&P 500. So it's going to be critical to see how Nvidia plays out tomorrow. For all we know, we can come down to this lower earnings expected move, and we could be flat on the trading session. We don't know, so we need to just be aware of what is going on come into tomorrow's trading session. You can see Nvidia right now, this is the daily chart. As I screenshotted this, we were trading right down here in the aftermarket session. And if you look just to the left of the screen, well, you see a big move up and a pullback down to here. That's not really all too crazy in my personal opinion. The lower earnings expected move is down here, and that would just be about a 50% or so retracement of its recent run up. Yes, that would be putting in an ideally lower high, but also it still would be potentially a higher low from this current low. So it's not necessarily incredibly bearish at this particular point in time, but it's nevertheless something important that we have to continue to monitor. Now, going into tomorrow, we do have these expected moves. This is something that I share specifically with my swing trading community. It's $9 a month. It's not an arm and a leg. I give all types of benefits. We have a daily, weekly, monthly, quarterly expected moves. I give my watch list, my tight list, which is updated weekly. I give trade setup ideas. It's not an alert service, so don't come in here thinking that that's what it is. It's not. I give a zones document, and then I have a comprehensive set of query bots that are from TradyTix, the suite that you can utilize there. If you don't want to pay $9 a month, pay annually. It's $90 and you save some money. So come check it out if you haven't done so already. Quick note on that, everything's posted in the Discord. So you have to sync your Discord up to the Patreon. Once you do that, you come back and you have automatic access in. Okay, this is the daily expected moves for tomorrow. And I want to point out something here. The daily moves are huge, right? The weekly expected move, I believe, for the S&P 500 was, let me double check to make sure. Yeah, $8.30, which is a decent size expected move. Tomorrow's daily expected move is $6. The Qs, right? The NASDAQ 100, $8.64. So expect some volatility tomorrow. I'll touch more on this in a moment. Okay, so if you want to screenshot this and know your upper and lower levels and your 2 sigma levels, please do. For those that don't know, these levels think of them as a distribution curve, right? Everything in trading is based off of probabilities. This is one standard deviation right here, right? One standard deviation between the upper and lower. This is the 2 standard deviation. One standard deviation, 68% of the time, right? The market closes within this range. That's your ideal range of risk. 2 standard deviations, the market's going to close within 95% of the time. That's just some basic statistics for you. Let's continue on. The SPX on the weekly time frame. Oh, heavens no, we're having a little bit of a down week. And sure, it's trading a little bit lower here in the after hours, but we're still above a rising 5-period EMA. Now, as I previously stated, we're under the gamma flip line in this current moment, which can change, we'll see. But also, I like to look at the 5-day moving average. And the 5-day moving average for the SPY is starting to flatten out to potentially turn down. I mean, if we're trading lower, chances are it's going to start curling down. And this is another sign of caution, right? Once we start declining, you really want to be patient because on the last downturn when we got below it, well, the market had a mishaps and it took a while to get back above it. And then once we did, it started trending up and we started looking a lot more healthy. Now, the SPY is getting below it. The Qs have been below it, and you can see it's been rounding, and it is declining. Try to get up here the other prior trading day, was rejected today. So we'll continue to monitor that and see if this trend is going to continue down. Now, if it starts getting back above it, but it's still declining because price action is taking the last 5 days, 1, 2, 3, 4, 5. So we're going to lose this data tomorrow, and it's going to start averaging this data, right? And as you can see, we're below the 5-day moving average. So we're going to start to lose this. And if we're trading down here, it's going to start averaging and starting to decline a little bit faster of a pace. So if we get above it, remember, it's still declining. So you want to see price action put in a higher low. You want to see it start to flatten out and turn back up to feel a little bit more confident. The IWM, it still has an inclining 5-day moving average, so that is a positive sign, but we are below it as it stands. The more we trade below it, as I previously stated, you start to lose data. 1, 2, 3, 4, 5 trading days. We're going to lose this data tomorrow, and we're going to start averaging in this data, okay? So if we trade below here more, it's going to start to flatten itself out a little bit. The DIA, it's currently above it, and it's currently inclining. So the Dow Jones Industrial Average has been significantly more strong from a relative basis versus the Qs. The NASDAQ Composite, so we're looking more broader index, has started to curl over, and you can see it try to recoup it, and it's getting a little bit rejected here. So you want to see this start to recover as well. Another interesting tidbit here that we talked about on a prior brief and many others is the yield curve is beginning to uninvert once again. It's not quite there yet as far as the 10-year 2-year goes, and the 10-year 3-month, don't get me started, that's pretty far off. But this will change. You can see it's been coming down because it is pricing in the Fed cutting rates. So when the Fed cuts rates, the 3-month tracks it very, very closely. When this starts coming off and starts catching up with these other yields, for example, the 10-year, which right here is in black, this is going to start to uninvert. And that could mean that we see additional pressure put on the market, as I pointed out on prior episodes, what it looks like when we start cutting rates and we begin to uninvert. If I look at the daily time frame for the SPY, as we're talking about, we can be walking into more volatility. It's important to note where the market could potentially fall to and some levels to keep an eye on. So as it stands right now, on this big gap up day, this happened to be a distribution day, I went ahead and anchored a volume weighted average price to it. And as you can see, we've been kind of holding and closing above this line. Now, in the aftermarket session, as it stands, we're currently trading under it. So if we close below it and it starts turning around, this can act as potential resistance. And if it acts as potential resistance, what is a level below us? Below us could be very well this gap fill, right? This is an open gap and it has yet to be closed. And it doesn't mean that it has to be closed, but many of the times open gaps can get filled. And if it does, we'll see where this swing low anchored volume weighted average price is. So really in this area, I'd be looking to see how price navigates in and around here. If it comes down, that is, and if we start seeing strength from it, it could be identifying a potential higher low where we can re-anchor volume weighted average price and see if it holds up in that area. Or more specifically, you can wait for the 5-day moving average to start to flatten out and then price to get above it, and for this to start turning back up if you'd like to be obviously more patient. And sometimes that is what is necessary to get paid. Now, if you look at the 15-minute time frame, as we've already stated, the purple line right there is the 5-day moving average. You can see that we're doodling around that anchored volume weighted average price, right? The weekly expected move for tomorrow is 553.83. Sorry, the weekly expected move for this week. The daily expected move, as we talked about on the prior slide, 55227 to the downside, 56433. Now, I think it's possible we hit this during the cash market session, but it's always important to note if it does tag it, I guess, in the aftermarket or pre-market. And as you can see here on Nvidia earnings slightly a little after, we came outside of the weekly expected move, and it's currently holding in that area. Now, from my experience, when we're there, this is kind of the safe zone, right? This is where the market, where risk kind of fades off because we've done what the market expected to do. Now, where it can get dangerous if it starts really breaking from some of these levels. And if we start breaking from these levels and you start to see intraday volume really start to pick up, meaning the 1-minute volume bar just really explode, this could be known as dynamic hedging, where we can get more selling into more selling, and it could be significantly more impactful of a break. And the reason why I'm saying this is because selling into selling, well, that also happens when you're below gamma flip line. Volatility typically increases. But not only selling into selling, buying into buying, so you can see massive price movements in both directions. Now, as we're approaching that lower weekly expected move, it's important to note that we also, coming in tomorrow, we have some macro data risk. We have GDP growth rate, and on Friday, we have core PCE, personal income, and personal spending as well on deck. So buckle up. There's a lot of volatility being priced in right now, even going into tomorrow. I'm sure there'll be even more on Friday again. And we are starting to notice some conditions change. So it's a time to be obviously a lot more cautious than usual. And when things start to recover, I'll be right back letting you know. See you later.